Well, Katie laid out her charts. It's now our traders' turn to figure out what the most important chart you should be watching for a real read on what's ahead. Tim, why don't you kick us off? What is your chart?
Yeah, you always have to be careful on the most important chart out there. I'm just going to tell you that you better watch FedEx if you want to have some understanding of not only where cyclicality is for the market, but certainly consumer demand as it relates to a lot of the e-commerce trends. But more importantly, I think the logistics dynamics that we've seen, and we spend a lot of time talking about them. What Dow theorists, and we talk some Dow theory on this desk once in a while, it ultimately says that the industrials or the transports could be pulling the overall market in a particular direction, and that there is correlation. And in fact, if you look at FedEx, it's underperformed the industrials. If you look at this 215 level where we closed on the stock today, it's really a level that doesn't have a lot of support below it, and it's a level that it almost feels like the transports and FedEx, which is the biggest transport, is going to pull them down. They just had great numbers, and that's what's disappointing because this stock is struggling.
Guy, what's your chart?
Yeah, I'm with Tim on FedEx. It's a great one, a 2-year low. It's HYG for me. Not that this trades particularly robustly. Matter of fact, it's somewhat of a sedentary ETF, but I think it's really important. And Karen mentioned it last night. I'm glad she did. And we talked about it before we went away. When this starts to move, and it's happened a number of times over the last 5 or 6 years, it's sort of the precursor of a bigger move in the market. Go back to the Chinese devaluing the yuan, I think in the summer of 2015. HYG started to roll over long before that. You can talk about, obviously, 08, 09. You can talk about as recently as what we saw in February and March. But I'll tell you, it's starting to roll over now. And you look at this move from 88.5 or so down to 82. Doesn't seem like a big deal. I think it's a big deal.
Yeah, Karen, you did mention it was your final trade.
Yeah, it's my final trade short the HYG a couple of times. And I think when credit markets start to get messy, right, and rates go up. So it's got two things going against it, a rate move and a credit move. So it's for me, I think it's a decent hedge.
Yeah.
So thanks for agreeing with me, Guy. I agree with you.
So what is your most important chart, Karen?
Well, I'm not really a chartist. It's more just pieces of information that you make a line through, which is CPI. Because to me, CPI, it's inflation. It is the thing that will just absolutely tie the Fed's hands on how aggressive they have to be. I think they have to do something regardless of, even if it is somewhat transitory and comes back down. They've already committed to this path. They have to go down it. But if it starts to really get, I mean, well beyond 7, which is even a crazy number, I can't believe we're talking about that, they have to be more aggressive. And I think we all sort of agree today was more Fed focused. It wasn't Ukraine. And so CPI comes in hot. That's going to be bad in the short term.
Yeah. Beakers.
Yeah, well, for me, let's just say it's right with the Fed, right? So I mentioned at the top of the show kind of the 3 things I'm looking for, and I want concrete examples of that things I can point to that's priced in. So I look at the number of rate hikes that the Fed that is priced in by the market. We're pricing in 7+ rate hikes right now, and that's in the bond market. So that means that market participants are already expecting that. So that's priced in. World War III. I put that down there because last week during this Ukraine thing, WW3, hashtag WW3 was trending. It appears, based on the action today in the market, that the market has said, okay, the worst of Ukraine is priced in. So now we need that last thing, which again will be that kind of gap and reverse on bad news. We haven't seen it yet, but that's what I'm looking for.
It's interesting because 3 of the 4 charts, really mine was the one that was stock specific, but I think you all hit on the macro is the most important thing. And Guy hitting on, and Karen last night on the HYG, the ultimate boogeyman for markets is a credit crisis. And we're nowhere near that because, first of all, we're not, I don't think, anywhere near a recession. But think about all the companies that have gorged themselves on debt and free money and all the companies that aren't making money. And think about where we were in 2019. We sat on this show and we talked about that triple B minus tranche or that huge slug of corporates that were vulnerable. And I think that's we all need to pay attention to. Right.